It's good to see you guys again. In today's video, I want to go over, let's say we only have $1,000 and we're wondering how to invest our money to make it grow in the stock market. We don't know where to start. So I want to go over, because that's how I started when I started investing. I only had $1,000. So I'm just going to go over the four investments that I bought, investment seeds that I bought. I'm not gonna go over it too much in details on the specific investment tickers that I invested in. I might give you some examples so you guys can know, okay, and then you guys can do your own research, and you don't have to blame me that, oh, I'm losing money. But I just want to give you an idea of how to diversify your portfolio, so you don't not putting all your money in one basket, and you investing in a bunch of baskets. So depending on where the market is, you're still safe and you're still making your money grow. Welcome to SimpleChew. I'm your host Hank, and I've been in accounting for 10 years. I also run a side hustle of a resale of items. If you've been following me for a while, it will help me a lot if you like the video. If you're new to my channel, welcome, and please subscribe and hit the bell, because I put videos every Mondays and Fridays. The first investment seed that we're gonna purchase, we're $1,000, is we're gonna buy REITs. REITs are fantastic because they have to pay us almost 90% of their real estate generating income that they earn to us, and they also appreciate over a long term, which is fantastic because we are not only getting dividends, but on top of that, we might sell it for more than we bought it for. They work exactly like stocks, where you find a specific ticker. I'm gonna put a couple of tickers here. I bought some of them that I have purchased some of these, but I'm not suggesting that you should buy them too. You should do your own research if you want to buy one of them. But they're great because they're fantastic for if you want to beat inflation, and they are you're not putting your money on just one property. Most of these companies who are running these stocks, they have multiple properties that they're managing, and all the properties are income generated, where they're buying big mall sections. But you can be really specific. Maybe you don't want to buy a REIT that has mall property, because malls are going out of business because of Amazon or the online. Maybe you just want to buy a REIT that is involved in living rentable units, where they only buy big buildings that people are living into, because people have to live somewhere, and that rental income is always going to be coming every month. So you might feel better buying that type of investment. Also, you might not want a company that has a lot of mortgages in all of their properties. You might not feel comfortable there. Maybe the company that's managing the stock cannot pay their mortgage, so you don't want a company that has mortgages in all their properties. Maybe you want to buy a REIT that the company owns all the buildings, and just they're selling the stock because they need capital to buy more in cash, more properties in cash, and they're not dealing with mortgages. So it's a bunch of things you have to think about, things they have to research. But at the end of the day, it's a great dividend payout that a lot of these REITs give us, and also we have the potential appreciating, which we're gonna get more money whenever we feel like we need to sell it. Maybe we retire, maybe we are ready to open that business that we've been hoping for, or maybe we want to buy a house, and we have that appreciation from that REIT stock. The second investment seed we're gonna buy are muni seeds, the municipal bonds that we're gonna buy from our state, and those are great because the greatest thing is they're tax free. All the income that you're getting from all the interest that they're gonna be paying you. And then the other thing is that you buy them from the government. So if you are from the United States, you buy them from the United States bond, they're pretty safe. That means that United States has to go under for you not to get your money. The other thing is, once the bond is, let's say you buy a 20-year bond, you're gonna get paid 20 years of interest, and at the end of the 20 years, you're getting your principal back, which is fantastic. It's something that not a lot of investments gonna provide to you, because if you buy the REITs stock, that might lose value, and even though they're paying a dividend, At the end of the day, you might not get your money back because it might go under, or you're gonna get less money than you put in. So it's another thing to think about. It's pretty safe to buy muni bonds because the government is backing it up, and it's a nice way to have cash coming in at the same time, knowing that it's gonna be safe. The third investment seed we're gonna buy is stocks that have dividends. So we're gonna buy companies, individual companies in the stock world, in the stock market, that is gonna give us dividend every 3 months. Most of them pay quarterly. So we're not gonna buy any stocks that have no dividends. So I'm gonna show you where to check if they have dividends over here. It's pretty simple. So if you check like Macy's, you can see how much they are giving you in dividends, and it's something that we are gonna pursue because we want to get paid every 3 months so we can reinvest our money. That's the whole point of getting that dividend. So we start with $1,000, but because we're getting dividends and we reinvesting the money, it just keeps working for us. The money keeps working for us, and that's the whole point, that we want our money to work for us. So stock dividend type of are perfect for our mission to continue growing our investment portfolio. And the fourth investment seed we're gonna buy our index fund, and this is my favorite type of investment because you're buying the whole market. You can buy the whole U.S. market. You can buy the whole S&P 500 market. You can buy the whole DASDA. Depending on why you're interested, you can buy the whole market. It can be confusing to understand what it means to buy the whole market, but it just means that you're buying a piece of a market that everybody is into. So a lot of investors are gonna put money in this basket, and then investment institutions are gonna grab all the money from that basket and buy companies that are in the S&P 500. So you will have a super diverse type of portfolio, and just buying one stock of this specific fund. Buying index fund is great because you don't have to think about diversifying your portfolio. You don't have to think about buying individual stocks that are already in the S&P. You can just buy all the S&P stocks for one low price, and then just wait, and you're still gonna be collecting dividends. You're still gonna be have the benefit of having an appreciation on your stock because it's following the S&P 500. But with any index fund, you still need to do your own research to see which one benefits you. What's your comfort level? How aggressive you want to be, because not all index funds that you're gonna buy are the same. Some index funds only buys companies that are really growth, has a lot of growth potential. Some other index funds focus on companies that are in the S&P, but it only buys companies that are high dividend payments. So you're gonna expect a high dividend pay if you buy that type of index fund. Some of them are, you want to buy the whole thing. You want to buy the total amount of all the index funds in the S&P. That might be you feel comfortable buying that because if one company fails, but the other ones are doing great, it balances it out. So it depends on where you want to go. Also, you can buy like small cap, big cap, meaning that companies that are earning 100 million or less, you can buy that type of companies and indexes. Also, companies that are 500 million and up, high caps. So it depends where comfortable. Thank you guys for watching. After putting our money in these 4 different investment seeds, we're gonna feel comfortable that we spread our money in different baskets. And if one basket falls off and we lose that money, it will still be gonna be okay because we have other baskets we will put our money in. But at the end of the day, we don't want to lose money. That's one of the rules of investments. You don't want to lose money, but we feel comfortable that each of our own investment basket is gonna do really well, and we're gonna be confident that we're gonna be making money in the future. And always remember, guys, to keep it simple.